Franchising is a huge economic force in the United States, representing 1 out of every 8 jobs, or nearly 18 million workers in the more than 825,000 franchise establishments. Everything from restaurants to luxury hotels to quick coffee shops and some of the country's most recognizable brands. Franchise business growth outpaced all sectors by 40% before the Great Recession. Yet the industry has struggled to maintain that growth coming out of the downturn. A recent industry report shows a significant shortfall, 20%, impacting the ability of franchises to grow in 2011. As the nation pursues its recovery, the International Franchise Association wants to get America lending again to franchising. The organization galvanized key stakeholders for a small business lending summit, which brought together leaders in franchising, finance, and government.
Franchise businesses will require $10.4 billion in new lending capital to fulfill 100% of the forecasted demand for new and transfer units in 2011, but credit flow may fall short by 20%. Meanwhile, the franchising industry also recognizes that lenders are faced with sharp declines in the value of borrowers' collateral, a strict regulatory environment. And while the unemployment rate has dropped a full point since November, lenders have also been affected by long-lasting record-high unemployment rates the last few years.
We're going to talk about how to put people back to work, how to make reasonable loans at reasonable rates.
There's a direct correlation between small business access to credit and job creation.
As reported in the NRA's 2011 restaurant industry forecast, when asked about obtaining credit, 44% of quick service operators and 29% of full service operators said that it was more difficult to obtain funds in 2010 than in 2009. That's a very, very scary statistic.
Franchisers described the benefits of franchising, but they also talked about major challenges they face in securing adequate financing.
My VP of Development, he's got about 100 folks that he has already sold licenses to. We got the money in the bank. They've paid for about 100 licenses, and he's just looking for financing to get the places open.
On my Dairy Queen side, I need to renovate my stores and just to stay up with competition.
The big picture is, how do we get banks of all sizes to start really lending? And I know part of the problem right now is with the regulators.
There are still gaps out there. And I know a lot of you are still saying, a lot of franchisees are still saying, I cannot get the credit.
I think it's fair to say that these past 3 or 4 years have been the most turbulent and difficult, I think, in the history of the financial system in the United States.
What the IFA has done, and obviously your members have done best, is finding those ideas, finding those niches that aren't being met by other companies out there. It's creating those businesses that will meet those market needs. It's taking those ideas, creating a great model that you can then spread around the country that will meet those needs.
You know, a lot of people blame the banks, blame the environment. We don't blame anyone outside our business. It's all about what we do. If we create the right environment, we will grow, our people will be successful, and what we want to do is obviously forge partnerships with lenders.
We actually made a decision to hire a full-time dedicated person on our corporate staff that was actually an ex-banker so that they could focus on pre-qualifying our prospects and our franchisees to make sure they should be approvable for a loan or what the issues are that we need to overcome before we ever submit anything to the banks.
I look back on my career as a small business banker, and I built it off of a couple of relationships with some good franchisors, including McDonald's, Dunkin' Donuts, and anybody who's had one of those customers knows how much revenue they can generate for you. And it's not about the loan, it's about all the other pieces that come with it. They're incredibly good customers.
Here is the power of franchising. You have women, baby boomers, professionals. What other industry do you know of that in a period of 60, 90, or even 120 days of training can take someone with ostensibly no experience in that field and convert them into a successful business person making really good money?
There's 3,500 franchise concepts, there's 7,500 banks. Man, that's an enormous powerhouse of job creation. And we need to understand that, we need to focus on that, and we can't just let time cure this issue.
We're beginning to see an uptick on the commercial and industrial lending side for medium and larger sized businesses. I think we're hopeful if we can sustain growth in the economy that we can make progress over the course of this year on the small business lending side. I think that's the challenge in front of us. And from the standpoint of a regulator, particularly one with a lot of responsibility for community banks, this is an issue in which we're going to be deeply engaged.
The biggest challenge for franchising is to show that the promise of lower risk is real, that the franchising industry's proven, structured, and scalable business model translates into more profit and less risk than other businesses. And we're committed to doing just that. The good news is we believe that lenders are looking for exactly what franchising offers, a lower risk way to generate revenue in an uneven economic recovery.
And they were looking for a dream, the American dream, and they found it in franchising. And today, as we move through this franchising opportunity, we have to be cognizant of that generation's hard work so that we continue to create that American dream for the next generation